Hey everyone, today we are diving headfirst into the very complicated world of low emissions hydrogen. We're going to break down the latest global hydrogen review from the IEA. Now, if you've been paying attention to the headlines, you've probably seen a ton of whiplash. Huge promises one day, worrying project cancellations the next. So, what is actually going on? Is it all just hype, or is this hydrogen revolution for real? Let's get into it. From missed targets to big projects getting shelved, the news has been pretty rough lately. And it's making a lot of people ask this exact question. Has all that incredible momentum just fizzled out? Is this just another false dawn for hydrogen? Well, today we're going to look past those headlines, dig into the real data, and find out what's really happening. For years, we've heard that hydrogen is this silver bullet, right? It's essential for hitting our climate goals, for boosting energy security, especially in those really tough sectors like steel and shipping. But turning that vision into reality has been, well, a challenge to say the least. And this recent wave of delays and setbacks has really put that optimistic future to the test. All right, so let's get right into the numbers that are causing all this anxiety. This is where we get our first big reality check on how things are actually moving along, or in some cases, not moving along in this global hydrogen race. So let's start with this number, 37 million tons per year. That's the total potential output from all the low-emissions hydrogen projects that have been announced. Now, the number itself is big, but what's really significant here is the trend. For the very first time, this project pipeline has actually shrunk. Just last year, it was at 49 million tons. That drop is what's really spooking people. And that leads us to this pretty stark figure, less than 1%. I mean, after all the talk, all the announcements, low-emissions hydrogen still makes up this tiny, tiny fraction of the almost 100 million tons the world already uses. The overwhelming majority still made from fossil fuels and without capturing any of the carbon. So you have to ask, why this slowdown? Well, it really comes down to three big hurdles. First, low-emissions hydrogen is just still way more expensive than the dirty alternative. Second, governments themselves are falling short on their own deployment goals. And third, and this is a big one, producers are really struggling to lock in buyers with firm contracts. It's that classic chicken and egg problem, you know? Nobody wants to build a giant factory without a guaranteed customer. But, and this is a big but, here's where the story gets a whole lot more interesting, and honestly, a lot more optimistic. If you stop looking at all the speculative announcements and you start focusing on what's actually getting built, a totally different picture starts to emerge. Let's look at those hidden signs of real concrete growth. And this slide lays it out perfectly. On the left, you've got the headline story. The pipeline of all announced projects is down. But look at the right. This is the hidden story. For projects that have secured all their funding, what the industry calls a final investment decision, or FID, production is set to explode. We're talking a five-fold increase by 2030. This is the number one sign that the market is maturing, moving from just hype to actual financed projects. And it's not just the number of projects, it's their absolutely staggering scale. We're talking about electrolyzers here, the tech that splits water into hydrogen. Just back in 2021, the biggest project on the planet was 30 megawatts. This year, China turned on a 500 megawatt plant. And by 2027, the NEOM project in Saudi Arabia is aiming for 2 gigawatts. That is a nearly 75 times increase in just 6 years. The scale of ambition here is just off the charts. And you know what they say, follow the money. And real money is pouring in. Capital spending on these projects jumped 80% in a single year, hitting $4.3 billion in 2024, and it's on track to nearly double again next year. This tells you that despite the negative headlines, serious investors are putting serious cash on the table. And finally, behind all the construction and the investment, the technology itself is getting better, and it's getting better fast. We're seeing a record number of new technologies getting closer to commercial reality, especially for using hydrogen in really crucial industries like steelmaking, shipping, and even aviation. The tools for the job are getting sharpened and fast. Okay, now let's zoom out to the global picture, because you really can't talk about hydrogen today without talking about the massive role that one country is playing. The global market is really becoming a tale of two very different stories. This chart pretty much says it all. China now makes up a staggering 65% of the world's installed electrolyzer capacity and projects that have confirmed investment. I mean, just like we saw with solar panels and electric cars, China has become the absolute engine of this industry, both in manufacturing and in deployment. And this split is creating this really fascinating global policy race. You can see here how different everyone's strategy is. The EU is trying to force demand with mandates. The US is trying to encourage supply with big tax credits. China, they're just using their massive state-owned companies to build the whole industry from the ground up. And India is focusing on incentivizing manufacturing. It's a huge global experiment, and frankly, nobody knows which approach will win. But this global race has a huge inequality problem. It's not a level playing field. In advanced economies, about 9% of announced projects have locked in their funding. In emerging economies, that number is a tiny 0.5%. Things like higher financing costs and regulatory uncertainty are creating massive roadblocks for progress pretty much everywhere else. So what we have is this incredibly complex picture, right? A market that is somehow stalling and maturing at the exact same time, with one country absolutely running away with it while others try to catch up. So what is the single biggest bottleneck that's holding everything back? And more importantly, what on earth do we do about it? This right here is the absolute core of the problem. Of all the low emissions hydrogen that could potentially be produced by 2030, a massive 95% of it has no committed buyer, no signed contract. And without those guaranteed customers, it's almost impossible for producers to get the financing they need to actually build these projects. So this is the key takeaway. The challenge has totally shifted. It's not really about whether we can make low-emissions hydrogen anymore. The technology is there. The ambition is there. The real question is, who is going to buy it? And how can we create the demand we so desperately need? So what's the fix? Well, the IEA basically lays out a 5-step playbook to get from ambition to actual action. The logic is pretty simple. Start with the low-hanging fruit. First, support projects for industries that already use hydrogen, like oil refining. Get those easy wins. Second, governments have to step in and create demand with clear rules and quotas. Once you have the buyers, you can speed up building infrastructure by cutting red tape. Fourth, use public money to lower the risk on new tech to get private investors to jump in. And finally, and this is critical, partner with emerging economies to help them build their own markets, not just be suppliers. So, let's go back to that first big question. Is the hydrogen hype cycle over? Well, based on everything we've seen, the answer isn't a simple yes or no. The hype is just turning into reality, and that comes with a lot of growing pains. The story of hydrogen isn't one of failure. It's a story of a difficult, messy, but absolutely vital industry growing up. The question now isn't if it will happen, but how quickly we can clear the road ahead.